Heidi ho, everyone. Welcome aboard. It's a brand new trading week, of course. And as always, we've got some trading buddies in the room. Howdy to all the trading buddies that are here. Paul P, Swee, John, how are we all doing? G'day, John. I hope you had a great weekend, everyone. It's been a very busy one from my point of view. It was my wife's birthday, so we've been out and about all over the place, restaurants and all sorts of things, living it up for the weekend. So I hope you had a nice time as well. Okay, Angel's got a few issues in the waiting room. That's all good. Happy Monday to you too, Swee. I think we're going to trade the breakout this morning, so let's have a look at that before we go anywhere. Now, this is arguably ranging. It's arguably trending as well to the downside. But over the last 2 days, or certainly today and Friday, I can make a case for a range in there, most definitely. So we will trade that, and we'll trade it my way for the moment. And that, of course, is we'll trade the breakout of the last 3 bars, 1, 2, 3, prior to London Open on the hourly chart. So we're going long above this one. It hasn't closed yet, so it may be new high. Let's wait for that one, but we can certainly put the short in play. It will be at 1.3667. 1.3667. The stop loss will be above that candle at 1.3694. $1.3694. TP1, we can work out. We've got a risk of 27 pips, so we'll halve that, make it 13, and therefore TP1 will occur at 13 below our entry, 1.3654. And TP2 we can work out will be double the risk, which will be 74 pips. So we've got to come in at 1.3593. Okay, so that one's ready to rock and roll. We'll have to wait on the candle to close before we set the long. We can put that in place, however. Now, once again, if you are joining us for the first time, this is still in test mode, very much so. Therefore, you don't want anything meaningful on the table here. In other words, don't risk any money, guys. That's the question here. Until we give it the go-ahead, that is not a wise move. Okay, so the entry was 1.3667. And the stop loss was 1.3694. Righto, that one's sorted. Now the long, we've still got a minute to wait. At the moment, that will be, I can put the stop loss in. Stop loss will be below the bar at 1.3679. That's for the long. And I can't do anything else. We'll temporarily write that in as 1.3824. Make that 1.3724, I think. No, that's wrong as well. What is the high here? 1.3714. Where they get those numbers from, I don't know. So we can put that in, 1.3714, and if we don't get a high higher than that, then that will be our entry, 3714. Stop loss 1.3679, so 35 pips of stop loss, making it 17. Better just put that in the market before it goes nuts, if it's going to do that. Okay. It is a buy stop at 1.3714. And the stop loss is 1.3679. Okay, so we'll monitor that, see how we go. Righto, stop loss for the short is right, stop loss for the long is right, and the entries look okay as well. Righto, now we sit and wait for an entry. Now, a couple of things I want to go through in just a tick, and they would be the orders that I put in the market on Friday. Those of you who are subscribed to the Telegram group would have got those calls, and one of them hit TP1 fairly rapidly. In fact, Euro Aussie. The other Euro Kiwi is yet so to do, and yeah, below our entry, it's kind of struggling to get through this, as you would expect. Dreadful entry, absolutely dreadful entry. They're the ones you don't want, where they just tip you in by the barest possible margin and then do nothing for the next, well, currently 2.5 days.
Good morning, mate.
Hello, buddy. How you doing?
I'm all right. Sorry, I didn't want to just cut you up, mate, but there might well be a trace.
Okay, go for it.
Okay, let me just open up my stuff here. I took my eyes off the chart, so let's just see if it's still there. Okay, so.
G'day, Lewis.
G'day, Lewis. Okay, so what we got? So Aussie Yen.
Okay.
Oh,
yep.
What's happened here? Okay, oh, maybe that's coming off a little bit already. Aussie Yen. Now let me just make sure I can get this with pivots. There's the pivot there. I like it here. I like it here. Now, if we just come down a little bit, there's a nice trend line through there, which means that we got quite a lot in the way here, really. And I quite like this for a longer term one as well. You know, I think the Aussie Yen coming down and nestling around about, say, on the weekly line, and I'm just kind of going to draw some of these in here. That looks like the target to me. Now, let's just see if we've hit that. I don't think we have. Oh, we might have done. Okay, let me just see if there's a lower target here. That looks like it probably is the target. I just want to see the room.
G'day, Jira. How you doing, mate?
Hey, Jira. Sorry, mate. I might not have been as ready for this as I first thought.
You're right. We can, if you're okay to stay with it, we'll
yeah, let's stay with it. I just want to have a look at some of these levels, because this is really a weekly trade. So I just want to have a look at some of these levels on the weekly and see. Yeah, that looks okay, doesn't it? That looks okay. So we're gonna aim down there as a potential area. So I think down to that particular point. Now I'm gonna have to. And now let's bring up this pivot again. And we're going to aim down to that point there. So this previous low down here at 82. So we've got about 130 pips to the downside that we can aim for. I think the stop loss above the trend line is about right. So it'll be above this weekly pivot and probably in between the weekly and the monthly pivot. So we're looking for 132. Currently, we'd be aiming at around about 40. So we're looking at around about a 3-to-1. But what I'm going to do is I'm going to put an order in at the pivot at 83.45. Now, I need to work out how much that's going to cost. So everybody else has probably got Trade Manager. I don't have that on here. And without having to do a whole bunch of calculations. So stop loss going to be above this zone here. In fact, if we tuck it above the monthly pivot, that would be 40 pips from that point. So we're looking at around about 83.90 for a stop loss here. 83.90 and entry on the pivot in and around the pivot. It might pop up a little bit higher, so I think we're okay to go around about the pivot at 83.45. Okay, now I need to work out how much this is going to cost. So let's do this first, and then I can start stacking. That's 4. Okay, so it looks like it's about $1 $1 a pip here, and we're looking at 40 pips. So that means I can go. Let's split this into 2. Now there's every chance that I won't just take half. I might. There's every chance that I'll just take the profit because I quite like the Aussie, you know, for the longer term. Sorry, it's 83.90 for the stop, isn't it? And 83.45 for the entry. Yeah, I quite like the Aussie for the longer term, but I just think that there's a little bit of potential weakness coming in here, and I'll go through a couple of things in a second of why.
Mm-hmm.
Sell limit. There we go. Actually, shove that up a little bit higher. Yeah, that's 40s. That's fine there. I'm going to shove this up a little bit higher. One more in there. The same thing. $83.90. Sell limit. 83.45. Okay, and use that Daniels in. That's fine. And just so we're on this as well, because we've got some time here. Make sure that's in the right place. There we go. Where's our one? Trading buddies. There. No, where are we? There it is. Sulfur Ash. Aussie dollar. Oh, sorry, Aussie Yen. Aussie JPY, and it's a short. Entry is 83.45. Stop loss 83.90. There we go. Oh, target. Target is 82 with a target of 82. And we will see sort of, you know, if that target changes as we go. You know, it might well do. It might shift if we start moving in the correct direction, and how we're going to manage this might start to shift as well. I'm putting this in the broadcast group, and then what I'll do is if I'm managing it when I'm not on air, then I'll just update management on there.
Cool.
Now let's talk about why. Unless you got to get to something. Oh,
No,
Jira looking at the Aussie Yen 2, but worried that it hasn't tested the top of the D1 range. The daily pivot, you mean? Or the top of this up here? So where the weekly pivot is? I think the weekly pivot is a good entry too, if not potentially a little bit better. But I suppose with stops up at the monthly, it looks pretty good. But let's have a look. So let's just look in a bit more detail. And first we'll look at the price action, and then we'll look at, unless you've got something you need to get to, mate.
No, mate, you're right.
Okay. So let's have a look at the price action, and then we'll have a look at some reasons behind it. So what we've got. So let's start on the monthly. So on the monthly, what we've got is a potential resistance area here. You know, there was quite a few touches. We've come and broken through, but with no real gusto, and it looks like we're back down below that level now. And I think it probably is that level. It's possible that level's this closing price here. which means we're on top of it. So it might be a little bit early, but that's okay because, you know, I'm looking for an Aussie yen short, and it might be that we're waiting until 89. You know, it might be that it goes up a little bit higher. But let me tell you the reasons that I think it's here in a moment after we've looked at this price action. And actually, that looks a better line. So the 84.38 looks like resistance. It was a bounce here. It showed resistance here, 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 around this area as well. So this looks like the topper area. So we've had a decent run to the upside, and it is pretty steep as well. So this would suggest that we would see some sort of retracement. I think it would be okay to aim here at 80, maybe 81. I think that would be okay, but we don't need to do that. You know, if we want to take something off the table, then we can. And maybe what I might do is just leave a tiny bit on the table to see if we can get down to 81. But it's going to depend on a few things. Now, the dailies, just looking at the dailies, if we start to zone in here a little bit more on the pattern, what we're getting is this head and shoulders. So we got the right shoulder here, we got the head up here, sorry, left shoulder here, head up here, and right shoulder. So this is a reversal pattern here. Now it does need to get through this neckline. So appreciate that it's got to get through that neckline, and that might be as far as it goes. But by that time, we can make those stops. We can put those stops at break even if it comes down here. Now that looks like the most likely the most likely point for a bounce. Now that would be a 2-to-1 if we get down there, and maybe that's where we end up taking profit. But let's have a look at the price action if it gets down there. Took a small short this morning. Well done, mate. 82 is your target. Brilliant. Brilliant. 82 down here. Brilliant. 82. You're on this low here. Yeah. So we're looking at those potentials. So 82 is our potential target, really coming down to the bottom of the pattern again, and that would actually make it a better head and shoulders in many respects, because this does look like a surer neckline from that left shoulder. So there's the dailies. Now the 4-hour, we're starting to see the 4-hour trend to the downside. Yes, this would have been a better entry. And it's possible, and really what we've got here is another low down here, a break of this closing price here, lower low. Is this a lower high? Stops at the top of the pattern. Actually makes a lot of sense. You know, I was going above the monthly pivot, but it actually makes a lot of sense to put it above the pattern instead. But I might try and go after this one, even if it does pop up and take me out. I might try and go after this one for a longer term trade. Obviously, if it comes up and we've still got the same target down at 82, then it's not a problem. So that's some of the technical reasons. Now let's just talk a little bit about the fundamental reasons. So firstly, I was reading up about the Australian economy yesterday, and housing. I mean, you can correct me on some of this, Jeff, if I'm wrong, but housing seems to be in a bit of a boom. It seems that the certain prices, CPIs, are starting to inflate. But the problem is in the business confidence numbers. I don't know if I'm right on this, but from what I gather, business confidence is actually a bit of a low, and it sounds to me like they haven't really been investing. But as I say, you can correct me on that, mate. But from the research I did, it sounded like the businesses haven't been investing. And what happens if they don't invest? If they don't invest, they can't employ. So if they can't employ, unemployment figures go up, and then you start to see the Australian economy in a little bit of bother. So that is one of the fundamental reasons I'm quite bearish on the Aussie. The other thing is that we have got, Julian was saying about earnings season this week, and that might just ease the market down a little bit. You know, that might take the edge off the market. Where they're going to put their money, they're going to put it in the yen potentially for some protection. And comparing what was going on in Japan, things aren't too bad when it comes down to in Japan. You know, things are looking a lot better. But it's all relative. You know, everybody wants to sell the yen because the interest rates have been so low. But we've all countries have really started to move more towards the yen. So the carry trade isn't there anymore. and then you're just looking at specific numbers with the yen, with Japan, and they're okay. The numbers in Japan I thought were a lot healthier. Now let's look at the Cot data, because this is really the crux of the matter for me. Look at the Cot.
Hi Paresh, how we doing?
Good morning, guys. Look what's been going on. Now this is the index here. So the way the index is calculated isn't really important, but the formula for the index is quite an obvious one. They're just taking the period's high minus the period's low, divided by the latest price. So it kind of comes, it's coming down here anyway, and we're at the lower end. And if we look at what happens at the lower end of the index, you tend to get a top. When you see the lower end, this is the Aussie dollar, you tend to get a top. So things do tend to fall. Now we're still in that top area, which kind of drives us down to potentially this point here. That looks a lot cleaner on this chart. That point there. That's on the Aussie dollar. Then we look down here at the net long and short. Now the shorts have come off a little bit, but the buying hasn't really come back in with any gusto. So they are net short with the Aussie. And of course, this kind of tells us that anyway. But there's a little bit of a gap here between the two. You can see that it's falling here, but they are pretty close together. But when you start to see these gaps forming, it does suggest that the Aussie is probably getting sold off in accordance with the commitment of traders. Then we look at the seasonality, and the seasonality is suggesting, when we look at April, look at what happens in the second week of April. Big drop to the downside. Okay, there might be a little bit of a choppy area here, but big drop to the downside right the way through until around about the end of May. And then we bring in the yen. So let's have a look at the Cot data from the yen. Completely different picture. The commercials index is moving to the upside. Okay, it's not at 80 yet. It's not at an extreme, and this is what we want to see. This is what happens when it moves to the upside. You see price action starting to rise. Happens again. Same thing happens here. The same thing happens here. The price action starts to rise, and when we've seen a big pop here, and price action hasn't really yet given us a decent move to the upside. So for that reason, the Cot for the yen is the best one to trade against the Aussie. And then we'll bring sorry, what I didn't show you there was the difference between the buyers and sellers. Not huge buying going on. This index is being calculated because the sellers are just leaving. So you can see a massive gap between, let me take the net away, a massive gap between the sell or the open trades that are currently short the yen and the open trades that are currently long on the yen. And finally, let's bring in the seasonals as well, because this is the final part of the picture. And the final part of the picture shows us that we have a seasonal bias to go long right the way up until October. Now, I don't know if we're going to be holding this right away until October. If we're taking most of the trade off the table, maybe we get that opportunity. I don't know. But that is the case, that there is a case to be made to go long yen. And I think, from looking through the Cot data yesterday, the best case scenario was short Aussie. The other one I quite like is the Kiwi yen as well for a short. Now I have got a Kiwi yen short on my other account that I've already taken profit on, but I'm leaving the rest on the table. But actually, if I was, and I traded that last week, but if I was opening it up today, I prefer the Aussie yen short, which is why I'm not going Kiwi yen short on this particular account. So I'm going to go Aussie yen short instead, because I think there's an opportunity there. So that is that, mate. Hopefully that kind of coins it up.
Yeah, look, with the Aussie, I said a couple of weeks ago that and it was more of a feeling than anything else, based on what I was hearing and seeing in politicians' world, I suppose is the way to put it. Because you've got states arguing with each other over COVID and why they should open borders, when they should open borders, why they're not, etc., etc. That kind of guffawing going on all over the place just didn't give me a feeling of confidence in the economy. And I think you're seeing that reflected in business sentiment that you've just touched on. Now, I wasn't aware of that. I didn't know that there was a number that had been posted on that. May well have been. I don't know, but it doesn't surprise me at all, because that would tend to suggest that the businesses are just a little bit wary of putting money into their own businesses at the moment, because they're not 100% sure of how COVID looks on the other side, or what actually when it's going to resolve itself, if you like. We've also got a very slow uptake of the vaccine for whatever reason, because supply is not getting through here. The government keeps saying that we're supposed to be producing 1 million AstraZeneca vaccines per day here in Australia in our own laboratories, and nobody's seeing that happen. But they just say, oh yeah, it's all going to happen, blah blah blah, but it's not happening. So there is a little bit of disharmony around the place at the moment, and when that tends to be the case, I can't see any reason why anybody else would be confident in Australia at this very point in time as well. Now, I think this is a very temporary situation, and that will resolve itself. So I think it is more COVID related than not. And I think coming out the other side of it, when they do get this vaccine sorted out, and everyone is vaccinated, or vast majority of the population is vaccinated, I think the confidence comes back. I think that business confidence will come back, and they will start to spend more money. The housing situation is most definitely of concern.
Yeah.
And
Sounds like a bit of a bubble.
Yeah. Look, it's not the first time, it won't be the last. And since the global financial crisis, everybody's been screaming Australian housing bubble. I think what is probably overlooked there is that it is a desirable place to live, frankly.
Yeah.
We here in Australia have got lots and lots of space and very little housing. When you look at, I don't know how many we've got now, 26, 28 million people, I don't know, something like that. And a whole lot of country that's, not developed from a housing point of view, because everyone lives in, the 6 major cities. Yeah. And everywhere else is kind of vacant, if you like. There's a whole big space out there in the middle of Australia. And I know it's not very friendly in terms of climate and infrastructure, that's for sure. But it's been based for a long time. The Australia's growth has been based very much on migration. Ever since the gold rush days of the 1850s, and that's never stopped. So I don't see a reason why that would stop. It's a very multicultural society. There's tons of space. There's tons of opportunity. There's tons of resources. So, of course, the housing is going to be of utmost importance to give people a roof over their head, number one. But in the major cities, which is where we're talking about these house prices rising, right? They just keep going nuts because of limited supply.
Is it a case of velocity though, mate, where the worry comes in? That's more the concern, is about the velocity of change.
It absolutely is. And, the unaffordability of it all, really. Because you've got to find balance between who can afford a house and who can't. That's going to put pressure on wages, right? The higher the house prices, the more demand on wage increases comes along. And whilst ever you've got, I guess, a reasonably strong unemployment figure and a growing employment figure, you'll be doing okay. But that's not the case. The unemployment's still at 5.7 or 8% or whatever it is. And the employment numbers aren't fantastic. I think they dropped as well, or they dropped. So I don't think that's a healthy sign right now. So I think there are reasons to think that the housing is an issue, and will put pressure on wages in particular. So I don't know where that goes and which way it goes. But housing bubbles, they're nothing new. It wasn't certainly not a new term here in Australia. They've been kind of saying that since, as I say, the global financial crisis, and really it hasn't exploded. We had a drop there a few years ago of 10 or 15%, which is substantial, no question, but it's not 40, 50.
Yeah.
Like
it's relatively
bubble.
robust, I suppose, even with a crash. Yeah. Jara's just asking about will the Aussie Yen 1 hour short go up to the trade line for a third touch? The trade line, I presume you'd be able to discuss this more than I would, Jeff, but I guess that's a trade line there, is it?
That'd be a trade line.
Yeah,
absolutely.
Yeah, it could do. I mean, it could come up there, and I suppose I'm trading the first resistance point in its way. That would save you around about 1/3% on your trade. So, I wouldn't discard that. I wouldn't say that it's not to be sniffed at. 1/3% on the trade. Every time you're going to make a move of 3, then you make an extra 1% on that. So yeah, it could do, absolutely could do. I suppose in a way it'd be better if this got taken in 3 hours time, because then the trade line above the lower one, this one here, could it come up there and touch there again? Yeah, it could, absolutely could do. And I suppose the question is, but this is what I was saying, Jaira, and there's 2 ways that you can effectively look at this and trade it. If you like this trade, you can go in half at this area, and then if it does come up here, you can put the other half on here, because you wouldn't have lost this at this particular point, because you would have got in at the same point that the first one stopped out at. So you could split the trade into 2 halves, and then not potentially lose out on the first entry if it does go, because there's no question. We're talking about Cot Data, we're talking about business confidence, and we're talking about weekly targets. So that really means that we're looking at weekly price action. So there's no question that during the week we're looking at five days of trading here during the week. Yes, it could come up to this point. So I would concur that could happen, and it's just a question of how you manage your trade. Do you want to get in half here, and if it comes up, put your other half on? Do you want to get in half here, put a stop loss on, and then go back in again here? Do you want to put a stop loss a little bit higher and take different positions in? It's a question, first of all, how confident are you that you've got a correct direction? And if you're confident on the direction, where you get in is really a money saving exercise. And I would completely agree that it's going to be much more paramount to protect your entry by going as high as you think it's going to go, rather than getting in just because you've got an idea. But I just don't know whether it's going up there. I suppose I'm taking the first point of resistance, because we've had so far. If I kind of come back to where the pivots are, if I come back to where the pivots are, and we add that trade line again, or the trend line again, I think it was that one, wasn't it? We add that again. It's got to get through this. It's got to get through that. It's got to get through that. Hasn't tested that low, so there is definitely a chance that we could come up to that point. And what's the pair? What's the fib? There's a fib of 38% retracement here as well. I mean, yes, there's a 50% up there. So, I wouldn't discourage you from aiming for that higher price, because I do agree with you. But it's just a question of management, just a question of how you want to manage the entry if you get in. Might not even get an entry here, might not even want to pop up. Surprised we didn't get pipped in there. No, just a little bit, a pip or two, slightly too high to get us in so far. I'm going to leave it where it is. But it looks good right now. Yeah. Anyway, mate, where else are we at? Oh, we got 30-minute candles now, haven't we?
I totally see where Jaira's coming from, because there's some slingshot candle patterns there that are suggesting that if price does go to that trend line or that trade line, the inner one that you've got there, that it will break through there. The question is it going to get there? And I can't answer that question. But for me, Aussie Yen at the moment is in no man's land. I can see every case that you've given for a short, and I think the weekly is probably the best way to go, because it gives you far more room. I think on the 30-minute charts and the hourly charts at the moment, and you've said it yourself, it depends on how you manage the trade, and you could easily get an hourly trade or a 30-minute trade in there to go to target, and then it turns around and go, if you're thinking long before short, you could easily do that. My problem at the moment is I don't really have a clear direction on it from a short-term point of view. Long-term or medium to longer term, no, let's say medium term, I can see, a nice double top up there, but I can also see a range, and we're in the middle of that range at the moment on a daily or a 4-hour, and for that reason, I haven't got a directional bias right now.
Yeah, I think that's fair enough.
But yeah, I can see slingshot setups all over the place for both long and short.
Anything?
And that's typical if I haven't got a directional bias.
Yeah, so you wouldn't be looking at trading this right now, really?
Look, I haven't looked at the bigger time frames really. One thing I would say is that was a very strong move up on the bigger time frames, on the weekly chart in particular, and we are at a resistance level. So I'd be expecting some selling, a bounce at least. To where it goes, I've got no idea. I do see an inverted head and shoulders on the monthly chart that has not had a retest of the neckline yet. And that is, and it's probably around the levels you're talking about, I'm not sure. That level I've got is around about the 78 mark. So there's 500 pips available there. It might be the 79 mark, 79 or 78. I totally see those levels as retracement levels. So you could be on the money here.
Yeah. Well, we'll see how it goes. I mean, it's very much a cot trade, really. Timing on a 4-hour,
that's for sure. Because as I say,
it seems pretty good, mate. Timing it is the tricky bit, and I think kind of going in relatively light to particularly when it's down here is probably the best course of action. But I might well be going after this all week. I don't know. I'm hoping I've got the right entry, but I might be going after it all week.
Cool. You've got to duck off very shortly, haven't you?
I do, mate. Yes.
Yeah. Which is all good. I've really got just my own stuff to go through, mate. 28.29. The pound has just hit TP1 on the breakout.
Well done.
I better take that. Have you done with the screen?
I do. Yeah, I've done with my screen, mate. Yeah.
Okay.
I'll quickly go and get myself together, and I'll come and say a quick goodbye.
Right. Happy days. So 31 was our first target. So we need to close half of that. And there it is, 31. And now we move our stop loss to 17 pips below entry, which will be 136.97. $1.3697. Okay, so that makes that no lose. And we can get on with our day. All right, let's turn the clock back to... sorry, Jaira. In 25 minutes from now? Okay, cool. Will do. Firstly, I'll go very, very quickly through the orders that I put in place on Friday in the Telegram group. Euro Kiwi was 1. and we've got a terrible entry on that. I think, as I said before, we're kind of in the land of keep our fingers crossed at the moment on Euro Kiwi. Euro Aussie, which I thought was very much the same trade, shot through very, very rapidly, but at the very same candle that gave us TP1 has also given us a very big reversal. Look, I'm still of the opinion that the euro is going to be stronger than both the Aussie and the Kiwi this week. Whether I can hang on to both trades is going to be the question. Euro Kiwi in particular looks to be in trouble. We're protected by the weekly pivot barely, so that may help us. We're not giving up on it, but it doesn't look healthy at the moment. Now, if it does take us out and give us another higher low, I will look to trade that again. So if I am too early here, I will look to trade it again. The third trade was dollar CAD, and we were looking to trade dollar CAD long, and that didn't trigger. And at this point in time, we've still got a potential higher low here. So I'll be keeping my eye on that one as well. You might even have a look at the smaller time frames because this looks very much like it could be a break of the daily pivot, and a potential retest of that might be interesting. Can I see a false break here? I probably can. If we go from here to here, yeah, that will be very interesting. If I get a bearish decisive bar here that closes on or below the trade line and the pivots in 1 hour and 23 minutes, I will be going long US dollar CAD. Okay, now Jair asked the question on Thursday, I think it was, or maybe even Wednesday, maybe Thursday, how I actually go about setting up my day. Well, how I actually set up for Slingshot. Well, these days it's far more complex than it used to be because I'm trading more at the moment on bigger time frames than I am on smaller time frames. And the reason for that is I don't have a whole lot of time up the sleeve to trade right at the moment. And that's going to be the case and has been the case for quite some time because of my business. So the way I approach that is I look, and I always have looked at the bigger picture, but now I'm concentrating on the bigger picture for my trades rather than trading intraday. So here's how that works. First thing I would do, and let's get a blank chart. We'll use Aussie Yen because we can, because I was just looking at that. And this happens on Sunday. I go to the weekly chart. And the weekly chart on Sunday, and those of you who've got a market scanner, this is where this tool comes in so handy because you can simply change each and every one of the available currencies on that market scanner. If you're clever enough to program your own, then happy days. That would be the way to go because this next step is, and I know the new market scanner, I don't know if you guys have got access to that yet, but the new market scanner doesn't give you this option, but it does display the option that I'm just about to go through. So on the weekly chart, I'm looking for two things. I'm looking for an inside bar. That's the very first thing I look for. Now, if it's in association with a reversal bar or a key reversal bar, then that's exactly what I like to take. Now, for whatever, that's why, because I'm on the current, sorry, that's this way I'm going, hello there. There's a few choices, but you've got to go one before. So you've got to go the previous week. And there's one shows up, Aussie Kiwi, and I'll show you what it means to me. Aussie Kiwi has just put in exactly what we like to trade. And that is a key reversal bar. What's a key reversal bar? A key reversal bar is a candle or a bar, if you like, that has a high higher than the previous high or previous candle's high and closes on its low, its own low, not the low of the previous bar. So that is a key reversal bar. And when it's followed by an inside bar, as this is, that's completely inside that candle, that's what we're looking for. But it has to be in context. That context has to be that we have a primary trend that suits the direction that we want to trade. Sorry, mate. Did you
Gotta
have
go,
to
mate.
say
Sorry.
goodbye?
I'll see you tomorrow, guys.
All right, mate. Catch you tomorrow. Have a good one.
Thanks, mate.
See you, bud. So back to this one. It's got to be in concert with the primary trend. So the primary trend, how do we work out the primary trend? Well, we go to the monthly chart and we look, oh, sorry, I didn't give you the direction that we're looking to trade, right? The key reversal bar is the direction that we want to trade in because it's pointing to the direction the market should be headed. Okay, so we want to trade in this direction. So we want to trade short, but we want to trade the inside bar as a candle or as a bar. So we enter below it and put our stop loss above it. Now, that's what we're looking. So we're looking for a primary trend that is down. So we go to the monthly chart, and here is where we find our primary trend. Where is the primary trend? Well, to my mind, I'll have to go a bit wider to give you a primary trend. The market's really not trending, but if I had to give a direction, you'd have to twist my arm, frankly. You know, we're getting a series of lower lows and lower highs, lower low, lower high. Then it goes into range. We got a sequence before that of higher highs and higher lows. Primary trend, I suppose we'd have to say I'm happy to say we're still short in the primary trend, but gee whiz, it's inconclusive, I'd have to say. So let's say we agree with that. Primary trend is short. We're looking to trade short, and we have something that suits us. Key reversal bar followed by an inside bar. That's where these inside bars are super important. Would I trade this week just because I have that scenario? Well, if it's not too dangerous so to do, then why not? What we have here, we actually traded this very similar thing last week, if you'll recall, on pound Kiwi. So pound Kiwi, let's recall that, right? On the weekly chart, we had a key reversal bar, but we didn't find our entry until we had this daily bar here, this daily inside bar. Okay, so we had the Friday bar closing down here, which wasn't a key reversal bar, but we had a key reversal bar on the weekly. And then we found the inside bar on the daily. So you've got to be a little bit creative with that. And that's what we traded down to the bottom here. That looks like it was just an absolute perfect scenario for us. And to get out there was exactly where we needed to do. So fast forward to this week, and we've got Aussie Kiwi with the key reversal bar. And we also have an inside bar here already on the weekly chart. So our bias, or my bias, because of that, is definitely short. Now, am I going to trade it is the question. And I haven't really looked at this too much because I'm already, no, I'm not already short Aussie Kiwi. I thought I was. Another account maybe. Here's what I see on Aussie Kiwi, right? And we spoke about this last week, double top, lower high. Let's get out of here. And we've gone into this range. This chart's convincing me that we're going short. So I'm okay with going short on that basis. Key reversal, inside bar. But I won't go through at the moment because I just wanted to show you, Jira, how exactly I set myself up. So that's really all I'm looking for on the bigger picture. That inside bar, if I get one, I'll look at it. Then if I don't, I'll go to market direction. Now, you don't have to have a market scanner for this, but it makes life very easy because I don't have to go searching. Otherwise, you just line up every currency. You just go to here and keep changing the chart, right? To whatever. But the market scanner, as I said, makes it much easier. So I'm getting a market direction on euro pound So I look at euro pound, big market direction, big bullish engulfing bar there. Yes, most definitely. Would I like to trade that? Look, reward to risk here is going to be a major factor. So I would then go, okay, you've got a risk of 244 and a reward of 155, and it's in a downtrend. I don't want to know about this at the moment. Is there a trend? Is there a primary trend? If there is, again, it's debatable, but probably up at the moment. Then I would go to the next one, Euro Kiwi. Euro Kiwi is telling me that I've got a key reversal bar in the direction of north. Primary trend, you'd probably have to argue, is again debatable. Maybe the downtrend is broken and we're now in an uptrend. You'd have to convince yourself that is the case. I find that hard to do. I've been sweating on this one for quite some time. As I say, I might be early on the entry for this from last week, but gee whiz, I see this up here somewhere. I really do. And if I wasn't already in the trade, I'd be thinking, okay, maybe wait for the inside bar next week and trade it, or I'll look for that inside bar, which we got here, which is pretty much what I'm trading on the daily chart. And that's suggesting to me that we're going long. So that's the kind of thing that I'm looking for in that case. But they're all on the weekly. So I start my weekly analysis is weekly. There's the key reversal bar on pound Swissy. Would I trade that? Well, probably not. I'd probably wait for the inside bar, which is an insurance bar, right? It's ensuring that if price comes back to the bottom of that bar, you've got a far better chance of getting the money than you do just jumping in straight away, because you haven't had a retracement on that or any consolidation. That's the insurance part of it. Pound Swissy is going to be very, very similar. Key reversal bar. If we've got an inside bar this week, we look to trade it next. But if you get one on a daily chart, as we did on Pound Kiwi last week, you may want to look at that. So if you've got another big bar, and that was an inside bar, for instance, you may look to trade that short. So I just go through that process. Now, if there's nothing there, I will then go to all symbols and go through them one by one until I find what I'm looking for. And it may be the case that the market scanner has missed it, right? And if the market scanner's missed it, fine, then I'll pick it up. But if there's enough there on the market scanner to keep my interest, I only want 3 or 4 pairs at the start of the week to concentrate on. And I'll concentrate on those 4 pairs all week until I get the setup that I'm looking for. And that could come on a 4-hour chart, daily chart, most likely on one of those two. But if I've then got a bias based on that situation, then of course I'll go back to my lower time frame slingshot strategy, which then comes at the beginning of each session, right? So in the mornings, what I will do is I'll go through exactly the same process. I'll go to the daily chart and I'll look for exactly the same thing, an inside bar, and then I'll look for a market direction candle and go through exactly the same process. And if I find that coincides with the bias that I've got, and maybe it's a new pair like dollar Sing, for instance, well, then I'd go back and have a look at the monthly and weekly chart to see if there's a reason to agree with those daily scenarios. And if there is a reason, then away we go. We can look for a trade, look for setup. So that primarily is how I start my week. And the daily situation just goes to the daily chart and on from there. When I'm then in the situation where I've got all bases covered, so I've got all the trades on that I need to have based on that analysis, I then will maybe look outside that if I've got time. If I haven't, I don't really worry. You guys often give me something to look at, right, that I probably haven't looked at for the entire week. There was one there today, Aussie Yen. Now, I've got no interest in Aussie Yen at the moment, as I says, because it doesn't fit any of those criteria that I just mentioned. So I'm ambivalent, if you like. I don't need to trade it, and I've got no reason to trade it. So let's have a look at that, for instance. It's come up as a, what am I scanning for? Oh, it's just all symbols, sorry. So let's have a look at it. What's the weekly telling me? Let's get rid of the market scanner to start with. Weekly's telling me that we are dead set in the middle of this range that I spoke about earlier. And for that reason, I'm not that interested. I'd like to see it go to a boundary. And I think as Jaira pointed out earlier, as you pointed out earlier, sorry, Jaira, we haven't yet hit the top, having last come off the bottom. So that's completely in play for me. And I'm the kind of person that likes to wait for that to happen when I'm in the middle of nowhere, which is where we are. But I've certainly got a bounce point here. Where it bounces to, of course, is the tricky question. And if I have a look at this chart, what can I see? Monthly pivot, weekly pivot, daily pivot, all close together. So really, I'm not that interested. I've probably got a clear lower high here after a double top. So that was probably something I would have been interested in. But I think the same situation where we had just a range last week, I wasn't really interested in trading it at all. So that's the kind of thing that might come up. If somebody says, well, have a look at this, and then I find, okay, that fits all of my criteria. Let's concentrate on this pair, for instance, right? If I saw, and I did whilst Ash was doing his analysis on it, if I see a potential slingshot setup, which I've actually got here in part, hourly charts giving me hints that we're going back there. There's no question about that. On the 30-minute chart, do I see anything that interests me? I see all these little bars that come up and pull back, come up and pull back. What I don't really have is a setup currently. I've got nice candles here. I've got them at a daily pivot, but I don't have them at a trade line, which is where I need them for my system to work. And I can see a hint of a false break here. False break out of what though? Have I got a trade line that I can use? I can see a bounce point, as I said, but I can't really see an entry for me at the moment. On the other hand, if I looked at a potential short, I can probably find a potential short because, again, I've got candle patterns that suit me, more so on that hourly chart than I do on any other. See, we've got a little doji bar there followed by a buying bar, and that's now not that bar, but this bar's hit the daily pivot. There's every reason to think that if price came back to here, that it would certainly go to these lows. So that's a potential setup as well. And, it's confusing me. The chart really is not clear. It's giving me indications that it could break either way. And I think whilst we're in this pivot situation and inside these trade lines, I wouldn't be interested. So the key reversal bar does not have to be as large or larger than the previous bar. No, certainly not. What was the pair? Can't remember. Let's go back to pound Kiwi. The key reversal bar. The key reversal bar can be anything. All it has to do is have a higher high than the previous bar or candle and close on or near its low. So I would certainly practice looking at those. And the key reversal bar in the opposite direction is one whose low is lower than the previous bar and whose high or closes on or near its high, just as that one did. So if you have a look at this chart, for instance, key reversal bars, none there, none there, none there. That is a key reversal. That is definitely a key reversal bar right there. And of course it played out, but gee whiz, you're still waiting for TP1, I would imagine, on that. That's a key reversal bar that worked, not to a large degree, but it worked. That's a key reversal bar that worked, not to a large degree, but it worked. That there is a key reversal bar that worked. That there is a key reversal bar that worked. That there is a key reversal bar that worked. So, they're all over the place. That's why I like them so much. but you've got to add context to them as always. You know, one like this is absolutely off the top shelf. I can't remember which one we traded here. It was probably that one. Looks like it was because the entry's there. Because you've got a double bottom sitting here and then you've got a higher low. You know, they're the sort of things with a key reversal bar that, you know, just sweeten up the deal. They're really, really cool. So, you know, they're really, 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 really where I'm at in terms of the bigger picture. And if, as I say, they point me towards 3 or 4 pairs at the beginning of the week, that's all I need. And they'll be written down on my book. There they are for this week. They're written down on my book. So I'm only looking at those 4 pairs right now. And as I say, if it comes to pass that you guys or Ash might say something, or I'll look at something else, and I always want to look at euro dollar anyway, because it really is my bread and butter on 30-minute charts. But I need to have a good understanding of it before I go into the day. So what I would do, and this is the next part of the slingshot scenario, how I set myself up intraday, what I will do is take this big picture in, for instance. So I've got an idea straight away that we're looking short here because we're looking for a bounce off the top of that channel. The thing that would spook me would be the gap that we got over the weekend, and of course that confuses the issue as well. It's closed, I know that helps, but I can see down here an untested weekly pivot and untested monthly pivot. So I'm thinking straight away that, you know, that's my focus. I'm biased there for sure. So then I would go down to the smaller time frames, the one that I like to trade, and see what's going on. We've already had a daily pivot test today, and we've had a rejection of that. So that takes away my edge. My edge, of course, is that if the daily pivot is untested, I know, because of the numbers, the probability that that will happen is extremely high. So whilst I'm ready to go short, I've also got to take that into consideration. But that's not a consideration today because it's already happened. See, the daily pivot has been broken, hasn't been retested, but it's had a fair bit of action earlier in the day. So my bias still being short, I would then look for a setup. Now that's the hourly chart. I don't normally spend a lot of time on the hourly chart. I would go to the 30-minute chart and look for trade lines now. Here's what I'm looking for, because I trade off trade lines. I have to put some trade lines on my chart. Or I don't have to. If I can see them, I know they're there, but I would certainly put that one on there. And I would certainly put this one on there. And they would probably be my trade lines until they're broken. And what I'm looking for now is a candle pattern that suits me, that's going in the direction that I want to trade. So if the daily pivot was untested, I'd be looking for false break of this trade line to go long. If that hasn't, and it isn't the case, the daily pivot has been tested, what's my bias? My bias is short. So I want to trade short here. So best way to trade short, as always, is off resistance. So I'd be looking for price to come up here, break this trade line, consolidate above it, either around the daily pivot or around the next resistance levels, then shoot back underneath here and retest it. And all of that tells me that the breakout here is highly probably going to be a false break. Now, if it is a false break, then it's pretty much common sense that the false break turns into an opposite direction, and therefore I'm looking to trade that short, which is perfect for me. So that would be my best case scenario right now, is if we got a false break of that trade line. If we don't, I probably don't trade, because what would the next way to trade it would be as a breakout of this trade line, which I'm not confident of, because I'm trading straight into yesterday's low without profit in the bank, I would have thought. So if I entered there as a breakout and say it was this candle, I've got 11 pips of stop loss, and I've only got 3.5 pips before I hit support. So I wouldn't take that. Then the other issue would be I'd have to wait for that to break, take that low out and retest it and enter there. That would be okay as long as I can get something in the bank before weekly pivot. So say the candle came down to here, pull back to here, give me about 10 or 11 pips, and I've got 9 pips to the weekly pivot. That's fine. I can take profit there or before there, and then I'm okay. So really, that is it in essence. That's exactly how I do it each and every day. You're welcome, Gyro. Cheers, mate. Have a good one. So yeah, that's pretty much me every day. It's a very simple process based on the structure of the market. And if the structure of the market is telling me that I have to trade short today, then that's pretty much all I need to know. Once I've got that directional bias, I can then go to the smaller time frames and work out where there might be a potential setup. So really, I'm looking ahead to say I have to go short. Best case scenario to go short is after a daily pivot test if I'm trading on a smaller time frame, because my stop loss is going to be very tight, and I need that certainty. I'll call it certainty. I need that certainty because I know the numbers that the daily pivot will be tested. And of course, I can't be 100% certain, but the certainty is instilled in me that I don't need any other information. If that daily pivot's untested and say we're 50 pips away from it, I'm looking to trade to the daily pivot before I go anywhere else. And therefore, I'm looking for a setup that allows me to do that. And if that comes as a break of support, if I want to go long, best case scenario. If it comes as a false break of resistance, if I want to go short, best case scenario. If that happens, that's kind of where I live. I live for false breaks. Why? Because it's the same as the daily pivot. If the daily pivot's untested, there's a high probability it will be tested in that day. With the other scenario, there's a high probability that that will happen as well. So I'm sure you guys realize that most breakouts are false, right? So those two things combined are absolutely key to my short-term trading. If I've got the daily pivot working for me, that's the edge I've got for that particular session. And if it's untested, that's the edge. And then if I get a false break setup that accommodates me trading to that direction, perfect. I've got both of those things really, really going for me. Yep. See, John knows that. Most breakouts are false. It's not really difficult to prove that, because every candle that's got a tail on it that poked through a range is a false breakout on another time, a smaller time frame. You can pick it up, right? Because if it comes down here, what am I on a 4-hour chart? If I went into a 30-minute chart, it's worked its way back on the 30-minute chart, and then for me to enter, I'd need to have a retest of that breakout level. False breakout. That's a false breakout. That's a false breakout. That's a false breakout. They're all over the place. That's a false breakout. They're everywhere, absolutely everywhere. Far more than breakouts are. And, you see that in the ranges. All a trend is is a roadmap to the next range, and those ranges are falsely broken most of the time. Not some, not all, but most of the time. Okay, very quickly through where I need to be. Now, pound Kiwi, guys, was one that I don't think I've touched on yet today. Now, again, because we traded this last week short, we were looking to pick this up for the long as soon as we got down to here, right? And that appears to be in good shape at the moment. But look at the mess that we've got. We've got the pivots here untested, and we've now got a potential breakout of that range. I'd love to see these close above the pivots, or this candle close above the pivots, and then come back and retest them. Now, can I see a false break anywhere here? That would excite me. No, I can't. But I can see a definite double bottom. There's no question there. It's evident on the 4-hour chart as well. So that's going to give me, because it's something that I do trade, that's going to give me a good reason to trade, because I've got a base that's formed and now a potential breakout of the range. So a couple of ways I can approach this, but I wouldn't approach it as trade the high of that bar until it breaks through here. And then it may even be a dominator if I could find a trade line through here, which is another thing that I trade, right? So I'd need to see this break and then come back and give me what? A higher low in here. Then I've got a chart pattern that's telling me this is a potential reversal. And then I've got confirmation of that reversal taking place with a higher low. Why? Because if price comes back to here and doesn't take on these lows, logic, as well as everything else that I know about trading, tells me that the sellers quit before they got to here. So they're not around anymore in the numbers needed to go through this support level. And that's the basis, it's the very basis of the principle of a lower high or a higher low. Right here, double top, lower high, bang. Right here, double bottom. If we get a higher low, I'll be looking to trade it that way. Hi, David. How you doing? What do I do if my psychology is bad for low win rates? Even though I know it will win, cover my losses, I can't psychologically manage. Hang on a sec. Let me unpack that. What do I do if my psychology is bad for low win rates? Even though I know it, win will cover my... Oh, okay, gotcha. Yeah, look, for that very reason, David, I trade the system that I trade because it is more a high win, low loss ratio. That comes at a big cost, of course, and that cost is profitability on individual trades. And here's how it works. And this is a trade-off in any financial scenario. The more you risk, the more you're going to earn if it pays off. The more you're going to lose if it doesn't, right? But if you've got a win-loss ratio of, let's say, 40 to 60, you win 40% and lose 60%, then you only have to get something like 2 to 1 on the ones that win to make it worthwhile. The way I trade, or the system that I use, has a much higher percentage of wins. So it's got 70 to 80% of wins. Not all wins, mind you. The breakdown is 4 wins, 4 break even, 2 losses. That's the 80%, right? So when that's the case, I can afford to do 1.25 to 1, I think it is, as an average win percentage in terms of dollars. That's the trade-off, because I'm taking profit very early. I don't run anywhere near the risk that I do if I'm taking profit, obviously, at 1 to 1 plus. So the TP1 that I use, which is very, very small normally, 1/3 of my candle, or the risk that I'm taking, where the stop loss is, I need 1/3 of that to be TP1. And that generally keeps me in a 4-4-2 situation, as I say. So how do you handle that psychology? Look, probably a couple of ways. One is trade a strategy that's higher win-loss in terms of percentages. The other, I'm afraid, is simply a matter of going through the numbers and convincing yourself that that system works long-term, and therefore you haven't got anything to worry about. The system has to be rock solid, of course, over many, many moons. hold that, you know, 3 weeks of trading or even 3 months of trading a particular system means that it's going to perform that way all the time. The market sentiment changes, the market circumstances changes all the time, and you know, we as traders have to be aware of that. So they're probably the only, well, there's probably another way, and that's seek counselling, but I don't suggest that that's probably where you need to be. You should be able to avoid that. I would go with find a system that's got a higher win-loss ratio, and use whatever system you're using at the moment as journal 1. Use the other system as journal 2. Cut back your risk on the higher risk strategy, right? The one that has less winners, and put a little bit more onto the one that gives you more winners in terms of win-loss. I think that would be a way to do it. I think you then see that you're winning more in terms of numbers, 4 wins, 1 loss, that sort of thing, rather than 2 wins, 4 losses, which can play with your mind most definitely. But because of trading education, I'm tentative of that risk to reward. Look, I would say 100% you should be tentative of anything that's high risk to reward. It needs to prove itself. And you need the number one thing, and I wrote an article about this years ago. The number one thing that you must have is the certainty around the system that you're trading, so that you know if you have 4 or 5 losses in a row, 6 losses in a row, you've got to know that system will come back at you and give you the winners that you need. That's simply the way it goes. If you choose to learn a high risk to reward strategy, it's that for a reason. The higher the risk, the higher the reward per win, right? That's the way I would do it. I would split that up. I'd run 2 journals and trade system A, which is your high risk to reward strategy, and just cut your risk down to bilio. You know, if you're risking 1% now, cut it down to 0.25%, and put the other 0.75% into the other system, which has got a higher win-loss ratio. And I think you'll then start to go, all right, this now ain't so bad. I'm now winning 6 trades and losing 4, rather than winning 3 trades and losing 5, or whatever the case may be. We need to be cool, like me, cool cucumber, wait for the right setup insurance broker and give the trade space to run. Swee, look, there's nothing truer than being cool when you're trading. The biggest problem is that's not easy, and you have to probably go through the ringer a few times to achieve that level of calmness, I suppose. Certainly I did. Took me a long time to actually accept that you lose a trade, much less 2 or 3, out of 10. That was not an easy thing for me to do, and I suspect, David, that's exactly what you're going through. It's not rocket science. Everyone does it. It's not new. It won't ever change, because the nature of the beast. If we're gambling, right? There's no other way to describe it, because if you look up gambling in the dictionary, it'll tell you that if you are investing or transacting or placing your money in a situation where the result is unknown, which is exactly what we're doing, that's called gambling, right? What we need to be is cool gamblers, or gamblers who are taking an absolute business-like approach to that risk. And any trader who's ever been through the ringer will tell you, and any professional trader will certainly tell you, it's not the way you trade, it's the way you manage your trade. So it's got bugger all to do with how you get in the market, and sometimes bugger all to do with how you get out of the market. But getting out of the market is very much part of that management. But it's how you manage your money within that trade that is, and within the whole gamut of, say, high risk to reward. If you're putting 2% on a loser, a losing strategy, and then start to cut that back because it's starting to lose, you're going to be chasing your tail for a long time. So you've got to be rock solid in that system, and you've got to trust it. And moreover, not just trust the system, you've got to trust yourself to do that, to trade that system and to manage it exactly how it needs to be managed. True, I love MT4, only recently migrated from TradingView. Isn't that interesting? I've just opened a TradingView account because I thought it looked interesting. I still trade on MT4. I haven't started trading on TradingView, but I just thought it might be interesting because it looks like it's got a few cool tools. I saw a video on your channel called From Systematic to Discretionary Trading. Do you think I'm shooting myself in the foot by not looking at fundamentals? Look, fundamentals are something that I struggle with. I get a good overview from Ash in particular, and that's why we call this show Trading Buddies. I kind of lean on him to give me a summary of what's going on around the place, of things that might affect me. Do I need fundamentals to trade? No, I don't, because the system that I use is irrelevant in many ways to what's happening on a macro view. Certainly on the smaller time frames, if I'm looking, as I say, to trade from here to here, that's all I need to know. And when I get a chart pattern that tells me that now is the time to go, that's the second thing I need to know. Because to me, trading is very much a visual thing and got nothing to do with what fundamentals are telling me. If I see that this is starting to go like that, and these lines tell me that it is, that all I've got to do is wait till it hits that line, gives me a reversal pattern and a higher low, as I've just described. That's all I need. And if I can trade like that all the time, you're going to find that you don't need much more than that particular. If that's all you traded, the only thing you ever traded was inside ranges. As soon as you come back inside, look for a higher low. If that's all you ever did, your win-loss ratio would be amazing, absolutely amazing. If you can identify these patterns, and they come as squares, they come as rectangles, they come as triangles, they come as all sorts of things. It can be a bear's head, if you like. If it's bouncing off it consistently, that's all I need to know. Circle, whatever, I don't care what it is. If it's continuing to do that and I'm not taking advantage of that, I kick myself, I really do. Look, oftentimes you won't get the opportunity. It's not all the time that you actually get a nice bullish engulfing bar followed by a higher low like that. And I wouldn't have traded that on this chart because I don't trade bull bars long. I've got to confess, learn how to do that because it would improve. So look, I haven't seen that article, systematic versus discretionary, but I was kind of asked that question last night in an interview on Trader Cafe. And my answer to that question is I've done exactly that. I started trading a system 13, 14 years ago and have never stopped trading that system. But in the meantime, I've changed that system around a little bit, and I've learned that system had nothing to do with this, mind you. The system is trading candle patterns at a trade line, as I'd previously described. But the method that I now use, which is very much that I've just described to you, it just bounces off the tops and bottoms of ranges, and anything that's got a shape to it is a range as far as I'm concerned. So that's exactly what I've done. But it's kind of a lot more than that, because it took me a long time to understand that no matter what's happening outside of this little channel, and that could be Donald Trump being elected, it could be a virus, right, that hits the world. It could be all of those things. It can be 100 different things and 100 different reasons at a different time. But really, at the end of the day, in particular with currencies, if you go to your monthly chart on all of your currency pairs and go as wide as you can, you'll find that every single time that price goes to a low level, the lowest possible, and it doesn't go there often, right? But every single time it does, it'll head back in the other direction, otherwise known as reversion to the mean, right? That's what currencies do. So that's why they're so reliable of bouncing off horizontal levels, trend lines, squares, circles, certainly channels. Channels are really cool. And just noticing that and then finding a way to trade that is probably key to what you need to be doing. If you want to trade on fundamentals, you have to do a very, very long course on fundamentals, because it's not just those few announcements or those few things that I mentioned. Ash is very good proponent of it. Alexis in our group, who probably wrote that thing that you're talking about, I'm not sure. Very, very good proponents of fundamentals. And Ash looks at fundamentals before he even looks at a technical scenario. And as I said, I get enough of Ash. That's what Trading Buddies is all about, mixing up ideas and throwing an idea at your mate. They wouldn't trade without that. And I get that, because they need to have that. And maybe it's just no, it's more than psychological. They need it to have a bias, right? Everyone needs a bias. You've got to have a bias. And my bias at this point is as soon as I get a retracement on here, I look for an entry long, because it's bouncing off the bottom and it's going to here, in my opinion. If it doesn't, it doesn't. But, and this has happened. Last time this happened, we got into a trade that went up to here, and we had a trailing stop too tight and got taken out with a win, yes, but we didn't get the whole lot, right? And that's, of course, what we're aiming to do. So, to summarize, do you need fundamentals? Look, if you're going to trade from a fundamental point of view, yes, you do. But if you're going to trade purely from a technical point of view, you need to be aware that there's a thing called coronavirus going around, and maybe think about that, which will add to your directional bias. But once you've got that directional bias based on what the chart's telling you, it doesn't really matter about coronavirus anymore, because the chart has all of that information right there in front of your eyes. And generally, the charts are pretty much on top of everything at just about any moment of the day. So and you've seen it in news announcements, right? If the news announcement is severe enough, it will change the direction of the chart for a period of time. But it's not going to change that. What's this, pound Kiwi? It's not going to change that pound Kiwi's lowest price ever is, $1.50 or whatever it is. And the next time it comes there, I won't be looking to trade it short. I'll be looking to go in the opposite direction, because that's what they do. You have major issues with identifying a dominant trend. I tried to trade the 4-hour charts, but the daily chart of pound US dollar has been very confusing as a trend. Then very simple answer to that one. If you are looking to trade pound US dollar as a trend and it's not trending, don't trade it. That's kind of the simple answer to it. And I'm not being condescending in any way. That's simply something that you must take on board. If it's trending, you follow the trend and you trade the way you've been. I've never been taught to trend trade, and I've never been a trend trader. So I'm really unqualified to say how you get into the market, but there's various ways, obviously, when you are a trend trader. But if you are trying to trade trend and the market isn't trending, simply don't trade it. And what you're saying is you're finding it very, very difficult to identify those trends. And if that's the case, then I would suggest to you, if it's not a clear trend and you can't identify it, don't trade it. It's the same for me. You know, if it's not clear that this is bouncing off these levels, then I don't trade it. We spoke about this earlier, right? Aussie Yen, I'm not convinced which way we're going here at the moment. So therefore, I just go on to the next currency pair. There's plenty of them. I don't need to trade that. So if it's not clear, it's very, very simple. Move on to the next one. John, I go with can't take a dollar out of the market and keep it. I go with can I take a dollar out of the market and keep it? If this is happening, I'm on the right pathway. Anything can happen once I've placed the trade, and I've now got that firmly into my daily system. Inch by inch, I'm improving. Awesome, John. Awesome. What we must understand that the market is a random beast most of the time and subject to all sorts of different things. Like, you know, the market is the market because of trade. And I don't mean you and I trading. It's there, it exists because people can actually buy. If I'm an Australian and want to buy a Lamborghini, for instance, I'd have to have that imported from Italy, and I would have to pay for that in Italian dollars, unless I bought it off a broker here, right? So therefore, the euro is then purchased by me. So if 6,000 people wanted to buy a Lamborghini at the same time, I know I'm using something that's completely out of possibility, or maybe not. Then the euro is going to have a bit of a boost based on those numbers. Same applies if somebody wants to buy wool from Australia, right? And they've got 6 million jumpers that they want to make. I've got no idea. But they place a massive order on wool based on futures or based on whatever contract that they've got to pay for in Australian dollars. Therefore, the Australian dollar rallies based on that. But that's a fundamental thing, right? If that's the case, then I have no control over that. And potential is if the order's strong enough and it's going completely against my little channel or whatever, I'm going to get taken out. It's as simple as that. I can't control that. That's random. But and it goes back to my first point, you've got to have a system that you can trust. And if it works consistently, you don't really need to worry. You just have to trust it, that it will come good. If you're trusting a strategy that loses 9 in a row, it's happened to me, 9 in a row. Did I get the SH1Ts? Yeah, wasn't happy, but it bounced back. It bounced back. Ray's daily find your market bias have been useful tool for my trade planning too. Doesn't matter how you find it, sweet. You've just got to find that bias. And if once you've got that bias and it becomes part of your system, for me, as you know, it's a shape. It's a range. That's how I get my bias. And now, in the recent couple of years, it's also those other things that I showed you, like the key reversal bar followed by an inside bar in a major trend. Okay, guys, I better get out of here or we'll get into trouble. So I hope that's helped in some way, David. There is no simple answer to the not liking the losing, and not from a psychological point of view. But I hope I'm giving you a few ideas there that you might be able to take away. I would add a system that's got a higher win-loss ratio and bias that in terms of dollars for a while and see how you go. Right, guys, got to fly. Thank you very much for your company, and we will look forward to having it again tomorrow when we have Shukri on board to talk cryptos as well.